We are experiencing some technical difficulties and we have not been able to resolve them. So we are very sorry if you have uh, decided to register and be with us here this morning and you are unable to access the link and access our presentation, but we are doing this recording so that you will have the information. And if you have additional questions, you will know how to contact us. And we will be more than happy to answer your questions, your own personal questions. So, uh, Violetta, then we're going to go ahead and get started. So, Violetta, why don't you go ahead and start with our presentation and uh, we'll proceed from there.
All right, thank you, Janine. So yes, my apologies for our technical difficulties, but we are recording this webinar, so you will get a copy. You will also get our sign-in form. So if you fill that out, you will also get the additional handouts that we had prepared for this webinar. But welcome to Understanding Credit Reports and Scores, presented by Great Lakes Credit Union's Department of Housing and Financial Services. I'll let Janine introduce herself first, and then I'll introduce myself.
Well, good morning again. My name is Janine Folin, and I started with Great Lakes Credit Union in late November of 2020, but I actually have over 11 years of experience in the field doing very similar work in Wisconsin. Um, I am currently HUD certified, but I was previously certified by the National Foundation for Credit Counseling as a credit, housing, and student loan counselor, and also a certified educator. My office is in Country Club Hills, but we do phone uh, and virtual appointments besides those in-person appointments. So you have a lot of options. And our offices are spread out over northeastern Illinois. So it's easy to get to one of us if you need to see us in person. And I'll turn it back to Violetta.
Thanks, Janine. So I'm Violetta Flemmenbaum. I'm Janine's counterpart to the north. She's in the southern suburbs. I'm in North Chicago. My office is in North Chicago, which is Lake County, Illinois. I've been with Great Lakes Credit Union since the end of 2019. Previously, I did work for the state of Illinois in their mortgage assistance program. I am bilingual, so I can assist clients in Spanish and English, but we do have access to a language line. So if you have family members or friends with other language access needs, we can help. And our appointments can be virtual or in person. So we do try to be flexible. And like Janine said, we do have a counselor down south, Country Club Hills, two up in Lake County, and then two in Chicago. And we do service Illinois and Wisconsin residents. Okay, so our mutual agreement, when we have our audience here, we always ask that you mute your audio and video. Questions, please ask them in the chat box. Those are always addressed at the end. We will be, again, sending out this recording, so you can always reply to the email that the recording comes through if you have any questions. And then we do also ask that you, once you watch the recording, you fill out the sign-in and the feedback form. That gives us valuable information to continue to bring these webinars to the community. So by filling out those forms, you're helping us out. And, as a bonus, you will also get all those handouts that we had gathered for this webinar. And just a little bit about us. Great Lakes Credit Union's Housing Counseling Department's mission is to improve the stability and quality of life of families and communities by providing education and counseling in the areas of credit and financial management, home ownership education, and foreclosure intervention. We'd also like you to know that Great Lakes Credit Union is actually only one of 8 HUD-approved credit unions in the U.S. We received our HUD designation in 2005, and generally we do serve about anywhere between 500 to 1,000 households a year through our education and one-on-one counseling. And I'll go through those in the next slide, the different areas that we provide that. So we do provide financial education. What's that? That's usually the in-person or online webinars, such as today, on different topics. We've had on, for example, tenancy, homeowners' rights, today's understanding credit. So we do touch on a different variety of topics for financial education that, again, we provide online and in person. We have resumed our in person home buyer education class as well. With credit counseling, that can include, for example, reviewing your credit reports and scores, learning how to increase your credit score, helping you create an action plan to decrease debt if that is something you're looking at. Providing access to credit building products, um, giving you the tools to negotiate with debt collectors, and correcting any credit report errors that might be on your credit report. We do provide a free credit report with scores as part of our individual counseling. Rental counseling can include doing an affordability analysis just to see if you qualify for affordable housing programs. And then, if it does apply in your situation, we would refer you to your local county housing authority. And again, we do that budget to see, what your rental budget would be if you might qualify for any programs. So we go over the whole picture. Pre and post purchase. So for pre purchase, that would be our home buyer education. We do offer it online. Um, Again, we have resumed in person home buyer education. It is a 6 hour course, and then if you follow it up with a 2 hour one on one course with us, you would get your certificate to help you apply for down payment assistance programs. So the pre purchase is really just helping you get ready for home ownership. And we look at, again, at that readiness, that affordability, looking at lending products, down payment assistance products. Um, Post purchase could be anywhere. For example, if you're looking to rehab your home, renovate your home, take out a loan for that, or you'd like to refinance, if the rates do get better and you want to refinance, that would be part of post purchase. Also, if you just want to set up a budget, now that, for post purchase, you own a home and you just want to set up a budget to make sure you have enough money to maintain the home so that, when the roof goes out or, if the dishwasher breaks, that you have that money in your budget. So we can assist with that as well with, creating that budgeting spending plan with post-purchase counseling. Foreclosure intervention counseling um, usually involves, identifying mortgage assistance options, helping you understand the foreclosure timeline and how to avoid it, talking with your lender to see if they have any alternatives if staying in your home is your main goal, and also exploring exit options if you are looking to let go of the home. So we walk you through that whole process with foreclosure intervention, and also talk with your mortgage company along with you to explore the different options. So, what's on the agenda for today? We are going to go over what makes credit important, what makes up a credit score. There's usually a lot of confusion over that. Like, how did I get a 700 or a 650? What makes up that score? So, we'll go over those components. How to read a credit report. They can be a little bit intimidating with all the information on there. It's not always easy to figure out how to read one and how to process that information that's in the report. How to improve your credit. We will also touch on that topic, what steps you can take to improve credit, how to protect your credit also is very important. You want to make sure you're not a victim of fraud or that anyone takes your personal information and opens up accounts without you knowing. So we will touch on that topic as well. And with that, I will pass it over to Janine.
Okay, thank you, Violetta, that for that great introduction. So, we want to address the issue of why having good credit is important. So, let's go ahead and advance to the next slide, Violetta, and we're going to get right into that topic. So, what makes credit important? Um, some people say, actually, my daughter, she knows how important credit is because she's my daughter and she has no choice. But uh, she said she was never going to buy a house. And some people say, well, I'm never going to buy a house, or I'm never going to buy a car, need a car loan or a home loan. So I don't really need to have good credit. And but good credit is important for things if you actually don't get any loans, or if you never even want to have a credit card. It's still important to have good credit. So, for example, landlords check credit. So if you want to rent an apartment, most of us, even if we don't want to buy a house, want to have our own apartment, or some place of our own to live, and that usually means renting an apartment. So landlords do check credit. Your credit report, and your credit score as an indicator of how well, do you repay your debts, and do you repay your debts on time? So there are people out there like landlords who want to know if you're responsible because they're letting you move in. And yes, you do have to make some payments up front, but long term, are you going to be able to pay for the apartment? And also, there's a lot of purchasing online now. So, as a general rule, you would need some kind of credit card or a debit card. Now, a debit card doesn't contribute to your credit score, because that comes right out of your checking account. But there's also credit cards that have like points on them. So you might want to earn those extra points. I actually have a Capital One credit card that has actually given me access to a lot of free stuff on Amazon, based on purchases I put on my Capital One credit card. So I do have credit cards and I do use them. Um, I have an account with Kohl's. I get discounts through Kohl's with having a credit account. And so anyway, you might want to take advantage of that. So having good credit and having access to that is something that if you don't want to do it now, you may want to in the future. If you have good credit and you do decide to get additional credit or get a loan, you are going to save money by getting a lower interest rate. That is, if you have a good credit score. So the higher the credit score, the lower the interest rate. And the lower the interest rate, the lower, or the less you will pay in finance charges. And literally, we can be talking thousands and thousands of dollars that you could save by having a good credit score. Employers check your credit. So, and you may wonder why. Well, they want to know, are you a responsible person? So basically, they're gonna check that out. Um, Utility companies may check your credit as well. I don't think that's as common, but it does happen. And in particular, I can tell you that if you have debt that was owed to a utility company and it shows up on a credit report as unpaid, as in it's in a collection, then you may not be able to get utilities in your name. So that's something that we often don't think of, because utility companies usually themselves don't report to the credit bureaus, but they're still checking. And also insurance companies will check your credit, and you might be able to get a lower rate having a good credit score. So even if you buy that car with cash, you're still going to have insurance on it. You're going to still have to deal with an insurance company. So you need to have good credit for that reason, if that reason alone. Sometimes there are other forms of credit, non-traditional forms of credit, but we're going to be focusing today mostly on the traditional forms of credit. Okay, and the next slide, please. So what is a credit score? I tell you this, I was looking at this slide. This is a new presentation. Some people who are much more creative than I am at Great Lakes Credit Union redid our presentation and with some new pictures, and they did a phenomenal job. But I was looking at this particular picture this morning, and I'm like, I don't like this picture. So, and the reason I didn't like the picture was because of the 930 credit score that appears in that picture in that half dial on the right side. But then after I thought about it, I thought, no, you know what? This is a really good picture. And the reason I thought that way is because your credit score actually depends on who's scoring you, what information they have, and what scoring model they're using. So if you're new to understanding credit, this might be some new information for you, or sometimes it might be new information for most of you. Um, people always say, well, my credit score is this. Well, nobody has one credit score. Whoever is scoring you is basing their score on what the information they have and the scoring model they're using. And so while a traditional FICO score range is between 300 and 850, there may be scoring models out there that do go up into the 900s. Um, there were, but I don't know of any right now that go up to that high. But there were scoring models that went up to the 900s. And when those first came out, it was very, very confusing for people. So that's just a one little thing I want to tell you about scores. A good score, according to Experian, a good FICO score is between 670 and 739. But don't get into like, oh, I'm bad. I have a bad credit score. Don't even get into that. So if you're watching this webinar, um, then you're here and you're learning, and that makes you great, in my opinion. Anyway, next slide, Violetta. So what is the FICO score, which is the most common scoring model out there? Actually, I don't know that that's still true anymore because the Vantage model is pretty popular, getting more and more popular all the time. But I would say FICO is still probably the most popular score that is utilized. And there are different components to it. Each of them carries their own weight. If you look in the bottom left corner, you'll see payment history is 35%. So payment history contributes to 35% of your score. That is essentially, do you repay your debts and do you pay them on time? That's what payment history is. The next category, it's sort of at the top left of that circle, amounts owed. It's always expressed in different ways according to the report that you're looking at. But it's much more important. You can see there it contributes to 30% of your score. So it's much more important than most people are aware of. So anyway, 30% of your score is amounts owed. So what are amounts owed? It could be per account, or it could be cumulative. And let me explain a little bit further. It's looking at your revolving or your credit cards or lines of credit and looking at how much you owe compared to how much is available to you. And basically, the idea is that you want to only utilize no more than 30% of your available credit. And once again, it could be cumulative. It could be the entire credit report, or all the accounts put together, that is, all of your revolving or credit card accounts put together. Or, and some reports might do it individually. I haven't seen any that do that recently, but there might be reports out there that do it individually. Most reports, it's cumulative. So anyway, how much of your available credit have you used? That's the amount owed or utilized. Sometimes on some reports, it shows up as how much do you have available. And the thing that you need to remember about this is that once your utilization goes over 30%, your credit score drops. So it's not just a matter of, well, I shouldn't just max out my cards. It has a very specific effect on your score if you go over that 30%. So lenders like to see utilization at 30% or less. If they're looking at a report that talks about how much is available, they like to see 70% available, or 70 or more. 70% or more. Let me make sure I say that the right way. 70% or more available. It's all, you take 100%, you divide it how much I used versus how much is available. And this whole category contributes to 30% of your score. This category, and let me go to the next one. 15% is length of history. So basically, if you have a good credit standing with a company and you're like, I don't use that card anymore, I just want to close it. Well, we suggest that you keep it open. Now, if you don't trust yourself with the card, maybe you should close it. If there is an annual fee on that card and you don't want to use it anymore, close it. But overall, you should keep them open. The reason is it contributes to your length of history, and it contributes to your available credit as well. So we don't want to lose that, and that's one of those really important factors. There's two other factors for credit. New credit, which is 10%, and that's basically every time you should know, every time you apply for credit, it does lower your credit score by a few or more points. It does bounce back in a few months, but you should just know that applying for credit is going to lower your score. So you shouldn't really apply for credit unless you need to, or you're trying to build credit. If you're trying to build credit, then you have to apply. And those inquiries have an effect on you as well. And we'll talk a little bit more about that. And then the last category is also 10%, the credit mix. Having different types of accounts on your report is good. In particular, car loans and home loans are great because what happens if you don't pay those? Well, you get the car or the home is repossessed. And they don't call it repossession, they call it foreclosure when you're talking about a home. But anyway, if you have those on your report, in addition to credit cards, and those are in good standing, that's good for you. That shows that you can handle those types of accounts. So having different kinds of accounts can be beneficial for you. It's not a big factor, but it is beneficial for you. And V, if you want to advance to the next slide. Okay, so what is a credit bureau? So these are the places that are scoring you. So they are companies that collect information and sell it in the form of written reports to creditors that make loans or extend credit. It doesn't have to be giving you a loan. They could simply be extending credit. And there are 3 national companies that supply most credit cards, or most credit reports. I'm sorry, I used the wrong term. Those are TransUnion, very commonly used here in the Midwest, also Experian and Equifax. Those are the 3 big companies. And next slide, please. So the credit bureaus get information from the creditors who are extending credit. Those creditors send in monthly reports. So every month that you are paying on a loan or you're paying on a credit card, for example, it's getting reported. We're going to show you a sample credit report in a little bit, so you'll get to see that. So new creditors when you're applying for new credit, they're going to use that information to determine if you are a good credit risk. Next slide. There's 3 different types of credit reports used for different purposes: a consumer report, an in-file report, and a residential mortgage report. So the consumer report will contain some of the same information a lender will see, but will have more information reflecting total history. And under federal law, you are entitled to 1 free credit report a year from each of the 3 main credit bureaus. When you make an inquiry of this type, when you're accessing your own report this way, it does not affect your credit score. So that would be a soft pull. Soft pulls do not hurt your credit report. When you come to see a housing counselor here at Great Lakes, or you have an appointment with us, we do a soft pull. Matter of fact, we pull well, let me just tell you, but that's the in-file report. That's the kind we pull. So let me tell you about that kind. So an in-file report could be a report from any or all 3 of the credit bureaus with or without credit scores, accessed by a creditor or a homeownership counselor to check the status of their credit and or credit score. That could be a credit counselor too. When we are talking homeownership counselors, and that's what we call ourselves, we're credit counselors as well. We have all of that knowledge in regard to credit. So you definitely need to provide your authorization for somebody to pull that type of report. You have to sign off on it, but it does not hurt your credit score for us to pull that report, or for that type of report to be pulled. So that, again, is a soft pull. And so I'm going to go back to the point I started to make earlier. The report we pull does have the scores and the information from all 3 of the major credit bureaus, and it's all merged in together, so it's really easy to read. And again, it has the scores on it. So, and we pay for it, but for our clients, we give them a copy of it for free. So lots of great information you can get by having an appointment with one of us. The last one is the residential mortgage credit report. So it's a credit report containing information from all three credit reports, a tri-merge, again, like the one that we pull. And this definitely requires your authorization, and it will impact your credit score because, again, if you're applying for a loan and a mortgage company is going to pull your credit, again, that's a loan app, that's an application, you're applying for credit. So it's a hard pull, and it will affect your credit score. They bounce back, but it does affect your credit score. Okay. And next slide, please. So you can get your free credit report from annualcreditreport.com. Those free reports do not contain your scores, but it's under federal law that you have the right to have your access to your credit report. That's why annualcreditreport.com exists. And you could go there. I don't know that this is the best idea for identity protection, but and Violetta will be talking about that later. But I had a boss once suggest that you could go to annualcreditreport.com and you could get your TransUnion report today, and then you can wait 4 months and you can go back and get your Experian report, and then you can wait 4 months and you can get your Equifax report, and then you can wait 4 more months and that'll be a whole year and you can get another TransUnion report. So you can like kind of be monitoring your credit. Now, the reason I say I'm not sure it's the best way for identity protection is because not all three bureaus always have the same information. Frequently they do, but not always, because you might have a creditor who's only reporting to one bureau, not reporting to all three. So I wouldn't say it's the best for identity protection, but it is not a bad way to monitor your credit. Now, when you go there, they ask you security questions. So you have to remember like your address from a few years ago or your phone number or something. I think phone number is actually not on there, but you have to remember some of your history or some of your accounts from years ago, because they will ask you security questions to make sure you are who you say you are, so they're not giving your credit report to anyone else. So anyway, and a credit report will have identifying information, public record information. You will bankruptcy, like when it says public record information, the kind of things that show up on the credit report are bankruptcies, foreclosures. Civil judgments do not appear on any of the credit reports that are received from the three big companies, TransUnion, Experian, or Equifax. So civil judgments, like if someone took you to court, like a former landlord took you to court, and there's a judgment against you, that information does not appear on any of the reports from any of those three big companies anymore. And medical debt, collections, going to the next topic or the next area, collections. Some medical collections are no longer appearing in particular, like if they're under, I think it's the amount is 500. That's something that's new, that's come out recently. So some of the medical debt is not being reported the way it used to be, which is good because sometimes you'd see multiple $30 copays in collections, multiple times, reported multiple times on your credit report. But anyway, basic credit information, again, do you repay? Do you pay on time? And inquiries. And then also the different types of accounts. So let's proceed then to the next slide, Violetta. Okay, so here's a credit report. You see there's information. If you were John Consumer and you use different names to apply for credit at different times of your life, how it's reported, how you applied, and the name will appear. So maybe you were John Consumer, maybe your actual full name is Jonathan Consumer, maybe at some point you were just going by J Consumer. So that appears. Your address and former addresses as well will appear. And also your social security number. Some reports actually have the full number printed on them. So, and this one here, it's showing up. I believe this particular document came from annualcreditreport.com. This particular example came from annualcreditreport.com. So they're not showing the full social security number, which is good. And then the words variation appear. So if you see variation, it just means whatever was typed in varies from whatever is on the report. And your year of birth on the also on the report. And then there's, you can see on the right side, you see dispute on annualcreditreport.com. This is actually something new, or newer, I should say. They didn't used to have this, but you could dispute it right, the individual lines. So that's really kind of cool. And if you have an electronic copy, you can dispute it electronically. So that's cool. Anyway, and next slide, please. You can put a personal statement on your credit card. This one says file frozen due to state legislation. I've never actually seen anything like that on a credit report before. But I did a little research earlier and found out that more recently, parents are allowed to put statements on their child's credit report. And the reason is because sometimes children are a victim of identity theft, and you're like, well, you're not thinking to check your child's credit report, because that's not something you're like, child's not accessing credit. Why do I need to check the credit report? But recently, there's newer legislation introduced that said you can put a statement on your on the credit report. And I have had a couple of clients in my time working who were children who were victims of identity theft. One of them was a victim of identity theft by her parent. So although she was old enough at the time to take care of her own credit, but this was before she had applied for student loans and couldn't get her student loans because she had bad credit, and it just was kind of a mess. So you can put a statement on your credit report. Next slide, please. Okay, and potentially negative items. Now, on this report, the negative items appear first. On the reports that we pull as housing counselors, they are just scattered throughout the report. But sometimes the bureaus are producing reports where the negative items appear first, so that if somebody's trying to decide, oh, do I want to solicit this person to try to sell them my great product that I have, I'm going to check their credit. It's a soft pull. They're going to do it. They're going to, it's a soft pull. It doesn't hurt your credit score, but they check your credit, and they can see right up front if there's negative stuff on your credit report. And they can say, nope, I don't want to sell to this person. Go on to the next. So sometimes the negative stuff does appear first. On this particular sample, no public records appear, but this is where public records would appear. Like I said, those bankruptcies or foreclosures, those types of things would appear there. And then the individual accounts. Now, this particular account has a late charge on it, so it's showing up right away. And this sample was taken from a report that was pulled in 2015 or in 2015. So even though it says 20, I don't know if you can see it on your screen, but even though it says 2015 in that bottom left corner under account history, look at it as kind of a current report. So because when this sample was taken, it was taken in May of 2015. So this was the best possible, or probably in June, I should say. Early June, maybe, of 2015. So this would be the best possible information. And each of those little boxes there are the monthly reports. And this is on annualcreditreport.com. Anytime you pay on time, you see those green OKs. That means an on-time payment. Now, in the whole history is good, but boom, in May of 2015, there was a late payment made, only 30 days late. So, and the reports are different, but this is, they had something happened. It's, I'll be honest with you, you can just plain out forget to pay something. And it can drop your score. I've seen credit scores drop 75 points based on a late payment. So really hard to build and easy to lose or to lower your credit score. So, come to one of our other webinars. We talk about how to counteract that. But anyway, okay, so what's on here? Account name, address, account number. Maybe not the whole number will appear, but account number's there. What is it? It's a credit card. It's revolving. The next column says recent balance, or that would be your recent or your current balance on some reports. Credit limit or original amount. This one says not reported. I really bugs me when people don't do that. They don't report, because that doesn't allow your available credit to, it doesn't allow the account to be figured into your available credit. And that's credit limit is what you're going to look at for reports. Most of the time, there you will see a figure in this credit limit area. It's very unusual to have something not reported. But if you're trying to build credit with something, you should ask the person you're trying to, or the company you're trying to build a credit with, are you going to report, and who are you going to report to? It makes a difference. Some places only report to one bureau. Anyway, high balance, 14,219. So that's the most they've ever charged. Looks like they did a really good job of managing their balance up until recently. Their monthly payment is only $10, not too bad. Recent payment amount, 0. Okay, yes, because in May they didn't pay anything. And past due amount, well, I don't know why it would say $20 past due here, because the monthly payment is only 10 and they've only missed once. Maybe they have the new amounts already due, so maybe that's what the $20 is. And date open, November of 2013. Date of the status, June. Okay, this was taken in June of 2015. First reported in December of 2013. And responsibility, individual. In other words, it's an individual account, not a joint account. The status is open and it can be disputed. This can be disputed electronically. Okay, next slide, please. Accounts in good standing. So here's where all your accounts appear that are in good standing. And you can see at the bottom a whole bunch of green OKs. Every month, paid on time, paid on time, paid on time. Very, very good. This report didn't have your score on it. So, it comes from credit report, annualcreditreport.com. So no score. So I'd love to see what the score is. I always like to see what the score is, but the same information appears here. I would say a credit limit or original amount. Well, most of the time you do see a box just showing credit limit. So that's in that middle column there. And then, okay, advance to the next slide, please. Here's another one. Oh, I wish they would have the limit on these. They're all okay. And somebody's reporting. This is actually American Apartments. This is a landlord reporting. Good for them. Not most landlords don't report. It's kind of a shame, because you pay all this stuff and then you don't get credit for it, like your apartments and your utilities, and so that's kind of a shame. But anyway, okay, next slide, please. Credit inquiries. Some are shared only with you, and those do not result in anything negative. Inquiries were shared with others. But those are always on there. The inquiries stay on your report for 2 years, but they only affect your credit score for 1. So that's the thing that you need to take into account. If you're thinking about buying a home, try to avoid using credit. Try to avoid using credit or applying for credit at least 1 year before you buy the home. And important messages, there's just some information there from Experian. So, and if you are looking at a report, you can take a look at that. Let's go ahead to the next page. Know your rights. That's really important. Under the Fair Credit Reporting Act, and you have rights under the Fair Credit Reporting Act, and you must be told if information in your file has been used against you. In other words, if you've been turned down for credit, you can go get a copy of the report that the creditor pulled to find out what's on it. Don't wait for that, though. Come meet with us and we can get you a free one. Anyway, and the next slide, please. Correcting errors and omissions. So make sure your credit report is accurate and shows a positive history. It's not uncommon to see errors on a credit report. By the way, it's not uncommon to see errors. People get wrong information. all the time. And so mostly in the area of things like address or maybe like name or something like that. So those are the most common types of errors. Um, you have the right to correct mistakes at no charge. And in terms of actually the steps actually for correcting errors, well, let me just, I want to read off my notes because I don't want to forget anything on here. So let me just get my notes in front of me. So I want to make sure I don't forget anything about this. Okay, so you can explain, you can call, you can correct errors by calling using the dispute portal through annualcreditreport.com or any of the credit bureaus. If you're getting a report from any of the credit bureaus, you can go through them, or by sending a letter through certified mail, including documentation. Um, it's always good to do certified mail because then you know that your letter was delivered to where it was supposed to go. You're like, oh, I sent them a letter and they didn't fix it or they didn't respond. Well, you got to make sure that it definitely goes to the right place. Um, okay, I just lost my notes. So bear with me a moment here. I'm actually going to go through this just literally note by note so I don't forget to tell you anything. So, and make your letter brief. You don't have to, you don't have to go into great detail, but just make your letter brief. The agency that you're sending your complaint to or your dispute to must get back to you within 30 days. Sometimes they get back to you just to let you know that they've gotten your request and they're looking into it. But they have to respond within 30 days. If you're not getting, a good response or you can't seem to get the situation resolved, um, then you can put this consumer statement on your credit report. If you feel like especially if you feel like something is clearly wrong and you're not getting anywhere with the credit reporting agency or the credit bureau or the individual creditor themselves. You can contact the creditor directly. Sometimes it makes more sense to contact the creditor directly or the credit bureaus. You can dispute with the credit bureaus. Um, Sometimes what happens is it's not proven to be accurate, but and it comes off your report and then you'll see it appear back on your report again. That's not supposed to happen, but it does. And so that's the good time when you could use that statement on your report. You could contact the creditor directly if you feel like you can work with them. And also, again, put that statement on your report. And the next slide, Violetta. Okay, so negative issues on your credit report. When negative information is on your report, only the passage of time will remove it. I have a colleague that says time heals all wounds. So basically, bottom line, you can't get negative information. If it's accurate, you can't get it off your credit report. I have heard some people say, oh, contact the creditor, ask them if they'll take it off. Well, you can do that, but basically don't expect them to say yes, because the whole reason is that it's part of your credit history. So if it's accurate and they want your credit history to be reported so that other creditors will know. It's kind of a group thing. They all work together. That's the reason for the credit bureaus. Um, accurate negative information generally stays on your credit report for 7 years. That is correct, except for in regard to a Chapter 7 bankruptcy that will stay on your credit report for 10 years. What are the kind of credit problems that can make it difficult to get a loan? Essentially, all the things that we have been talking about: late payments, um, collections, bankruptcies, other judgments or liens, basically the bankruptcies or foreclosures are what's going to appear on there. Um, and past due credit accounts, collection accounts, charge offs. If you see charge off on your report, that doesn't mean you don't owe the money. That just means that particular creditor charged off their books as uncollectible debt and probably sold it to a collection company. Um, so, you could have a collection company coming after you for a debt that you had with, J.C. Penney's or something like that years ago. Um, Foreclosures or repossessions, anything like that. Those are the kind of things that can make it difficult to get a loan. Next slide, please.
Okay. So I think this is where I take over.
Oh, yes, I'm
Quick.
sorry. My screen didn't show me the number of the slides. So sorry. Yes.
No, we're very lucky to have Janine, who actually just has so much extensive knowledge. So I'll try to add in a little bit of my knowledge here. With common credit issues, if you have questionable credit, it's important to prepare a realistic spending plan and follow it. If your spending plan, your budget isn't realistic, you're less likely to follow it. So be realistic when you're preparing that, and we can assist with that. Um, Seek professional help if you find that, for example, you don't know how to prepare a spending plan, or you feel like your spending is out of control. You can definitely reach out to one of us, to a housing counselor, to make an appointment so we can go over your overall financial picture. Pay past due accounts. We'll help you again with the tools to negotiate a discounted payoff if your account has gone into collections. Negotiate a workout plan. A lot of times, creditors are willing, if they know they're going to get their money, they're willing to work with you. Um, to establish a workout plan. Write an explanation letter, include it in the loan application if you're applying for credit. And for example, something might show up on your credit report that might be questionable. You can write an explanation letter that, at that time you were going through the situation, but now it's resolved. Negotiate a debt management plan, and reestablish credit for at least a year to help improve that score or establish that score. Because again, as Janine mentioned, it does take time. So try to give yourself, at least a year to reestablish that credit um, to a point where it'll be working for you, it'll be favorable for you. Um, Ways to improve your credit score. Again, Janine did mention some of this. Correct and accurate information. You can go through the credit report, like now they have where you can dispute an annual credit report. And also the individual credit bureaus, Experian, TransUnion, and Equifax. Pardon me, a lot of them do have online portals where you can click on to dispute it online. So they make it a little bit easier. Pay your bills on time. Again, that payment history is 35% of your credit score. So continue to pay your bills on time and minimize outstanding debt. So that kind of goes along with paying your bills on time. Pay them on time and try to pay more than the minimum to bring down that balance. Apply for and open new credit accounts only as needed. So again, you're going to get offers everywhere you go, the department store, Costco, wherever you go, but only open the new credit accounts if you really need them. When you have all those inquiries, it does show on your credit report, and it can um, harm your score, even if it's temporarily. Use credit cards responsibly. Again, try not to use more than 30% of the balance on that credit card. So if you have $1,000 limit, um, use 300, or, well, not use, but if you are going to use it, don't go over $300. So 30% of that. Reestablish credit if you have had problems. We can assist with that again with housing and financial counseling, giving you the tools to get back on track. So non-traditional credit, um, some lenders, for example, if you don't have a credit score or you're just establishing credit, there is such a thing as non-traditional credit. Non-traditional credit, basically some lenders can accept non-traditional credit history as evidence of credit worthiness. Um, You'll have to prove, however, that you were on time with rent, phone bills, utilities, and other regular payments that you've made over the years. As you know, Janine mentioned in an earlier slide, some landlords do report the rent payments to the credit bureaus. So if your landlord does that, that should show up on your credit report. You can also ask them to report it to the credit report. Um, you can, I believe, through Experian or one of the credit reporting agencies. I think it's Experian Boost, where you can actually add your phone bills, your utilities, um, to your profile so that they're being reported as, with the payments being made on time. So those are ways to use that non-traditional credit. You might be able to use canceled checks to show, for example, the date of rent payments if your landlord doesn't report it to the credit bureau. Um, so just again to go over that, non-traditional credit references include rent, insurance payments, um, gas, electric, and other utility payments, child care or child support payments, or any other large recurring expense. But yes, Experian Boost is one of those where you can actually put in your cell phone bills, utilities, so that they start reporting on your credit report. Establishing credit. So if you'd like to establish credit, you're unscored, you can apply for a secured loan or a credit card. Essentially, what that does is you deposit money to go against the loan you're trying to take out. So for a credit card, it may be $250 that you actually deposit, and then you'll get a $250 credit line that you'll pay off as you use it. And once the bank sees that you're using it responsibly, after a certain amount of time, they'll turn it into a regular credit card, and you'll get that deposit back. So that would be a secured loan or credit card. You can apply for a loan with a cosigner. If you have someone that has really good credit and they're willing to cosign with you, you can apply for a loan together. Again, they just have to be aware, and you have to be aware that it's going to affect their credit if you're not paying that loan on time. So just be aware of that. And it's the same with getting added as an authorized user. For example, to, a parent's credit card account or a spouse's credit card account, if they add you as an authorized user, you do benefit from their good credit, but you do have to continue to be responsible with any charges you make because it will affect their credit if you're not paying that credit card on time. Using a lot of that available credit. So you can establish credit, you just have to make sure that you are responsible if you are using any of these tools. Protecting your credit. So if you want to avoid the temptation, for example, to be in more debt, you can opt out. And what this means is these resources we have here, the 8885 opt out phone number or the website, optoutprescreen.com. If you go on there, you can elect to make sure that you're not getting sent pre-screened offers. Those letters you might get in the mail that say, "Oh, you've been, pre-approved for a credit card with us with a $700 limit," so that you don't have those temptations. You can go to that website. DMAchoice.org is another website that you can sign up, where they will limit basically the amounts of junk mail for products and services to be, delivered through your mail and I believe also email. So these are ways to just opt out of getting that junk mail, those pre-approved credit offers from reaching your mailbox. Handling identity theft. So if you get your credit report, you notice something on there that doesn't look right, contact the fraud departments of the three major credit reporting agencies, Experian, Equifax, TransUnion. Contact companies where you know that the fraud occurred. File a police report and ask for a copy of the report to submit to the creditors and others that may require the proof of a crime. Change all personal information associated with the accounts. So any logins, email, passwords, make sure you change them so that whoever gains access that way doesn't have that access anymore. Check your credit report every 6 months. That's something we can do here as housing counselors if you decide to seek services with us. Um, Order credit report and dispute the errors. So again, we pull up that credit report, go over it with you, make sure we're looking at errors, give you the tools to dispute them, and contact the Federal Trade Commission. So again, very important steps to take to handle identity theft. Knowing your rights, I'm just going to go through a few of these. All of these acts have several rights for consumers, but I'll go over the big ones. For example, the Equal Credit Opportunity Act, ECOA. Some of the big bullet points on that. It ensures that all consumers are given an equal chance to obtain credit and that creditors cannot treat you differently because of your sex, race, marital status, religion, national origin, age, or receipt of public assistance. The Truth in Lending Act gives you the right to be given details before you sign a contract or a loan agreement on exactly how much credit is going to cost, what the payments are going to be, and when they're due. So that's the big one with the Truth in Lending Act. The Fair Credit um, Billing Act, the Fair Credit, it applies to open-end credit accounts, such as credit cards. And basically, another revolving accounts and covers dispute settlement procedures for billing errors like unauthorized charges, pardon me. Fair Credit Reporting Act. It's designed to promote accuracy and ensure the privacy of information in consumer reports. Some rights include the right to receive the copy of your credit report, like Janine mentioned, with all the information in file at the time of request. Includes the name of anyone who received your credit report in the last year or for the last 2 years if requested for employment purposes, and it entitles you to a free credit report if you are unemployed and plan to look for employment in the next 60 days. So those are some of the big ones. With the Fair Debt Collection Practices Act, it requires debt collectors to treat consumers fairly and prohibits unfair, deceptive, or abusive collection practices. So, for example, debt collectors have to identify themselves to you on the phone when they call you. They can't call you before 8 a.m. on weekdays, or actually 7 days per week. They can only call you between 8 a.m. and 9 p.m. And they have to stop contacting you at home or at work if you ask them. So those are some of the big ones with these rights. We will have the links in the handouts for anyone who does fill up the sign-in form. We'll send that information as well. So in closing, any questions and answers that you might have after viewing this webinar, please send us any questions you might have to housing@glcu.org. I'll have our contact information up here. Our phone number, 224-252-2620. And by web, our website is www.glcu.org. But again, if you have any questions on any of the material you heard about today, our email is housing@glcu.org. And again, we thank you so much for your time. We really appreciate bringing this information to you.
Well, that was wonderful information, Violetta. I'm so glad you were here and that we had the opportunity to do this recording, even though we had some technical difficulties. Everyone can access it, and everyone can fill in that sign-in form and get those free handouts. And we apologize for our technical difficulties. We will get those worked out in the future, I assure you. And have a great day. Have a great whenever you're watching. I was going to say have a great weekend, but I don't know when you're watching this. So have a great day. Thank you so much.
All right. Thank you, everyone.